Welcome to Burlap Teachers. Enjoy the video.
In this video, I will explain how to buy new company shares. First, you'll want to understand the initial public offering, or IPO, process. This is how a private company first offers its stock to the public. Next, thoroughly research the company's financials and market potential. Look for strong growth prospects and a solid business model. Finally, determine if you meet any eligibility requirements for participation, as some IPOs have specific investor criteria. Once you've done your initial research, the next step is to set up your investment vehicle. Open a brokerage account with a reputable financial institution. This account will hold your shares. Then, fund your account with the desired investment capital. You can typically transfer funds electronically. Also, consider if a direct stock purchase plan is available, as this can sometimes simplify the process for certain companies. Now it's time to execute your purchase. When placing your order, consider using a limit order. This allows you to specify the maximum price you're willing to pay, giving you more control than a market order. Understand the differences between order types, like market versus limit, to make informed decisions. After your acquisition, it's wise to monitor the stock's performance to stay updated on your investment. After successfully acquiring your new company shares, the journey continues with effective management. Regularly review your investment portfolio to track its performance and ensure it aligns with your financial goals. Staying informed about company news and broader market trends is crucial for making timely decisions. Also, for those looking to simplify their daily routine, check the description for a link to some fantastic leak-proof meal prep containers, along with other great deals.
Thanks for watching. Consider subscribing if this video helped you.